Hello traders, and welcome to Optic Trading. The day we're going to be discussing is a very interesting day. Right now we are looking at a crude oil chart. It's a daily chart, so each one of these bars represents one day, and the date is September 30th, 2014. So far the day that we're going to be discussing comes next, and this day has been the largest move in crude oil for the whole 2014 up until this point. Now, before we start, I want to make it clear that this type of day is not the norm. Trend days occur far less than the other day types, but it really pays to be able to detect these days early because trend days can be extremely profitable. Catching one good trend day can really make your month. Catching a few of these a year can even possibly really make a great year for you. I'm not going to be covering all the conditions for trend and every setup that occurred on the day we're discussing. This video is not meant to be an in-depth teaching, but rather a short introduction to some of the techniques that we use with the optic trading methodology. With that said, let's get started. Here I have a daily chart of crude oil, and currently we are in an intermediate term balance area. So down here would be the balance area low, and up here would be the balance area high. Now currently we're trading at the balance area high, and when we're trading inside a balance area, the extremes of the balance area are really where the real opportunities lie. There's a couple setups in between, but the real great opportunities with excellent reward to risk ratios are going to occur at the extremes of the balance area. We're not going to go in depth at this point on balance areas, but at this point I just want to make it clear that this is a mature balance area and this is one of the conditions for trend. Okay, now I've switched over to the 24-hour chart, and this is just the overnight activity leading up until we got the trend day. So what we want to notice here is we have a tight range, and normally we're not going to pay too much attention to overnight activity. Before the day starts, we want to look at overnight activity, and in the professional trading course, we'll go much more in depth with overnight activity as well as openings, where you opening in relation to the previous day's close and the previous day's range. But at this point, I just want to point out that this is another balance area. Now, this is an overnight balance area, and overnight activity is definitely going to get less weight in terms of significance. And that is just because volume is very light and no real large players are trading at this time. You got a lot of small trades going on here and there. The reason we want to pay attention to overnight activity this time is because we have a tight overnight range. And if you can imagine holding a spring in between your thumb and your first finger and then squeezing your fingers together, as soon as the thumb or the first finger lets go, the spring will shoot out in the direction it gets released. It's the same thing with the overnight balance. Stops will be accumulating above and below the balance area, and when we look outside of the balance area, we have the potential to trigger those stops, and that can cause an explosive move. Now, that's not always the case. There is more setups that can occur around balance areas. For example, one setup I teach is called the snapback trade, and that teaches traders how to identify when a balance area is going to fail, and even when a level of support or resistance is going to fail, but that's beyond the scope of this video. Right now we're just discussing the current day and how we could detect a trend. Now let's move on to the 5-minute pit chart. If you were zoomed into this chart, you would think that the market is trending up, and when we broke out right here at the beginning of the day we're discussing, you would think, oh, this is a great opportunity to get long. The market's moving up and up, great opportunity. But we already seen the daily, and we know that we're actually at an intermediate term resistance zone and a balance area high. So this extreme we'd have to approach with caution if we were thinking about a long, and most likely we'd be thinking this is a great spot to fail. Now, if we're following the optic trading rules for breakouts, we would determine that this is not an acceptable breakout, and we would pass on the trade. In the program, I teach all the setups as well as when you don't want to take the setups. But for now, let's continue with the trend day example. So we've already identified that the intermediate time frame is in a balance area, a mature balance area. We are also at an intermediate time frame resistance zone. And this is going to be a likely spot for the higher time frame player to enter. So intermediate term frame on the daily chart, they're going to be watching this area and they may want to step into the market. Now when the higher time frame player steps into the market, that's when you can get these large moves. So let's go forward with this day. So first we break out, but it was not an acceptable breakout, and then we come back in. Now this is a failure. So what's going on here is that all the people who are getting long here off the open, their stops are likely under the open, and selling was likely taking place above the zone as well. Now we push into the zone. First we got the failure. Now when we take out the open and the low area of the day, likely there's going to be stops under there, so we can expect a good flush coming down. Now we scroll forward, we see a large move go right through the open. Now I don't have relative volume up on this chart, but the relative volume for the day was already 52% above average. So we're running at 152% average volume. So that's letting us know that the larger time frame player may be present, or even if he's not present, volume is high. So we should be expecting larger ranges. Now, when we had that tight bounce overnight, we have now broken down out of that bounce. So the spring is getting launched. All those stops are going to be getting executed. So we can expect that we're going to break through this level right below us. Now we scroll forward, come through. Okay. So we can say, okay, clearly it's looking like we're having a trend right now. The market's pushing down pretty aggressively. At this point, relative volume is now 173%. So we're 73% above average. We can expect range expansion at this point. Now, there's a couple other setups that occur during the day, but I'm not going to discuss every single setup. There's ways you could enter even if you didn't catch the original failure. So we're scrolling forward here. Large move. Now look at the volume down below here. We're getting large volume, quite a bit larger than the previous days, and we're seeing 10,000, 11,000 contracts here. That is the large player. That's the higher time frame player. The small guys aren't going to be having this much volume. Now another interesting thing here is I'm going to switch to the composite profile right here and show you right here at 9169. Now this is a VPOC. That just means volume point of control. And I'm not going to go in depth on how to read this chart right now. I just want to point out that this is the highest point of volume. So this is where force should likely be coming in and stopping this move. The fact that we just sliced right through it is signaling us that change is occurring. Now this is a 30-minute chart we're looking at right here. So we're not seeing much detail into how the bars are moving, but what we are seeing is that we're having pretty much a sharp straight down movement, and we slice right through that level. So change is definitely occurring. Now we're seeing the high volume come into play over here. That's telling us that the higher time frame player is really in the market, and we don't want to step in front of this. Now we are in a trend down, and there's plenty of opportunities where we could have got in the trend. And there we go. Now the day is over. Now with trend days, when you get on board early, you want to stay on board till roughly the last hour. Around 80% of the trend days are going to close either on the low, or they're going to make the low in the last hour of the day. So it pays to hold on to these trades until the last hour of the day. You don't want to get shaken out when you see a whipsaw right here coming up, because that's quite early in the day. You still got more time to go. Now I'm going to go over to the profile chart here, and if we look at the profile, look at the elongation in this profile. An elongated profile is really showing us that the higher time frame player is present in the market, and the conviction is to the downside. So with that said, we definitely do not want to go against this. And another concept I touch on in the course is acceptance and rejection. So now we've pretty much been rejecting down, and right here where we see this little bell curve, this is showing us acceptance. So lower prices are being accepted. We are getting higher volume as the market moves down. And at the end of the day, we kind of died out. Now, some of these concepts may fly a little bit above your head. If you're an advanced trader, you may be picked up on a few of these things. With the trading course, it definitely goes more in depth that I don't have time to do in this one video, but there's several videos that go on in depth on the setups, how to detect trends, and how to understand when the higher time frame is present and who's in control of the market. Thank you for taking the time to watch this video and explore optic trading. If you have any more questions or inquiries, please don't hesitate to contact support. We look forward to hearing from you, and best of luck with your trading.